Hello and welcome to this week's Real Estate Report on the Finance News Network. I'm Melissa Beaumont-Lee. This week we continue our series looking at suburbs with the highest increase in median selling prices in 2010, with a focus on two suburbs in the ACT. In our interview, we speak with First National Real Estate CEO Ray Ellis about the outlook for property in 2011, with a focus on Perth, Adelaide and Darwin. And in our tax tip, we look at how capital gains tax is affected by a marriage breakdown. But first, let's catch up on the latest property news with Lelda Smits.
Melbourne has outranked Sydney as the world's most livable city in the annual survey by the Economist Intelligence Unit. Vancouver took the top spot for the fifth year in a row, scoring 98% on a combination of stability, healthcare, education, infrastructure, culture and environment. The survey ranks cities based on 30 factors within those categories. The Canadian city was followed by Melbourne in second place. Sydney claimed the seventh spot. Adelaide and Perth both tied in 8th place and Brisbane came in 21st. 7 of the top 10 cities were from Australia and Canada. The first US city on the list was Pittsburgh, coming in at 29th. New York held on to the 56th spot. Paris was ranked 16th and London 53rd. The first Asian city was Osaka at number 12.
This week we continue our series looking at suburbs with the highest increase in median selling prices in 2010, with a focus on two suburbs in the ACT. First, let's look at Farrer, a suburb located 15 kilometres southwest of Canberra's CBD. With a population of 3,360 in the 2006 census, the suburb is bordered by Beasley Street, Yamba Drive and Athland Drive. The Farrer Ridge Nature Reserve, part of the Canberra Nature Park, borders the southern limit of the suburb. Farrer was established in 1967 and is located in the district of Woden. There are many single-storey houses and two-storey houses with double garages, built mostly in the late 60s and early 70s. The suburb is home to Farrer Primary School, with local high schools such as Melrose High and Erindale College just a few kilometres away. Farrer has a neighbourhood oval, several playgrounds, a Croatian Catholic parish centre, Serbian Orthodox church, small shopping centre, Long Gully Scout Hall and Goodwin Village for the elderly. Turning to the figures, and houses in Farrer recorded Canberra's highest increase in median selling price in 2010, rising 30.9% in the 12-month period. 48 properties were sold in the year, recording a median price of $726,500. Over the past 10 years, the median selling price has risen 12.6% each year. Our next suburb is Mackellar, located 12 kilometres northwest of Canberra's CBD. With a population of 2,604 in the last census, the suburb was established in 1983. It has many large single and double-storey houses built in the 1980s along tree-lined streets. Located in the Belconnen district, the Australian Federal Police statistics show Mackellar's crime rates are officially the lowest in that area. The suburb features Mackellar Oval, a preschool, shopping centre and a small football stadium. Mackellar is now serviced by a bus network along Dumas Street and William Webb Drive. Turning to the figures, and houses in Mackellar recorded Canberra's second highest increase in median selling price in 2010, rising 29.5% in the 12-month period. 38 properties were sold in the year, recording a median price of $647,500. Over the past 10 years, the median selling price has risen 11.6% each year. Let's now turn to our interview. This week we hear again from First National Real Estate CEO Ray Ellis. We discuss the property outlook for 2011 with a focus on Perth, Adelaide and Darwin.
Perth or Western Australia, we should replay exactly what I said last year. The mining boom continues. Port Hedland, Broome, Karratha, we can't build new houses quick enough. This is in contrast to Perth, where activity in recent years has slowed down dramatically in comparison to the heydays of 06 and 07. Slightly better returns in 2011, certainly better returns for investors in the rental property market, but not the highs. Certainly we'll never see the highs again in recent times of 06 and 07s, but a certainly improved outlook for 2011 in comparison to last year for the Perth metropolitan area. Adelaide is always a consistent performer in the Australian property market. Doesn't have the highs and lows of the major cities of the eastern states, but the impact of the mining boom in the north of the state is yet to be felt. Good planning, good infrastructure, and you're seeing this in the Mount Barker area, where over 7,000 new dwellings or people are expected to move there in the next number of years, again will drive growth. The outer suburbs of Adelaide continue to grow. Not the high performance of, say, Melbourne or even Sydney in 2011, but good solid growth throughout most of Adelaide in 2011 is what is expected. Darwin, great performer in 2010, no reason to change the outlook in 2011. Prices should grow up to 5% for houses and even up to 10% for apartments and units. Great territory at the moment, good economy, people moving there, great vibe about what's happening there. Darwin, good investment opportunity for anyone in Australia in 2011.
And now to the tax tip of the week from Depreciator, the tax depreciation schedule specialists. This week we take a look at how capital gains tax is affected by a marriage breakdown. Generally, capital gains tax applies to all changes of ownership of assets on or after the 20th of September 1985. But there are a few exceptions. One of those exceptions is if you transfer an asset to your spouse as a result of a marriage breakdown. In certain cases, there is an automatic rollover. This rollover ensures the spouse can disregard a capital gain or capital loss. In effect, the one who receives the asset will make the capital gain or loss when they dispose of the asset. As always, do remember to consult with a tax accountant or tax professional before making any tax-related decisions. And that's the Real Estate Report for Monday the 28th of February. Thanks for joining us. I'm Melissa Beaumont-Lee for the Finance News Network.